Good evening, folks. This is your host Mandeep. It's Wednesday, March the 25th, and I'm going to do yet another tutorial and talk a little bit about also the ultimate trading strategy and show you some of the results of the ultimate trading strategy during this trying times. Hopefully, most of you have taken a look at my previous video where I talked about an indicator that kind of foretells a change in the market direction. And for that, we looked at the ratio WIX to the WIX 3M. And I mentioned in that video that whenever that ratio gets above 1, it implies a change in the direction of the market. It also implies that the volatility is now increasing, and you need to be more on the cautious side. So when the volatility increases, one of the things you can do is that, if you trade like, let's say, for example, 100 shares, you could trade like maybe 20 shares or even 10 shares or 30 shares, because it'll have sort of the same movement that you will get with 100 shares, right? Just because the market has huge gyrations during the day between the top and the bottom, right? So there's a lot of discussion around, what is, where is the market going to bottom, right? And again, maybe the experts can tell you sort of the precise point, but I'll tell you from my experience that all you can do is look at the levels and just react to those levels and make decisions based on what happens. So, instead of considering this as a binary event, you can look at it as more of a computer algorithm, which is like if then else, right? So if this level breaks, then what do you do? And if the next level breaks, what do you end up doing, right? So that's perhaps the easiest way to look at it, rather than having a preconceived notion, right, of whether the market is bottomed or not. But there are some factors we can look at to see, when the market is, close to bottoming, or does it give you some clues around it, right? So the last video we talked about, the change in direction, when you need to get out of the longs, and right now we're going to look at opportunities where you can, maybe start to dip your feet in. So what are some of the things that you will look at, and I'll walk you through that. Now, the first thing I want to show you is, the monthly chart on the SPX. And one of the things I did was that I drew the trend line from the low of, 2009, which was the financial crisis. And basically, we have here what the high was, right? So clearly, for most part, in all these years, SPX traded inside this channel. And for a short period of time, it was outside of this channel. Now, I know I'm talking about this in hindsight, but I had told several of the people that are in my Discord room to be extremely careful when we actually broke this channel on the upside. And many of the folks in the Discord room will back me up in saying that I did mention that just get in cash as much as possible, or have a significant portion of your trading account, or if you want your 401 account in cash as well. At least that's what I did for myself, right, where I took 99% of my money out, both from my 401k and my trading account, and put it in cash. It's not that I didn't trade during this time. The only thing I did more around this time was day trading, right? So of course I left some risk on for overnight sessions, but for most part my focus was really day trading. Now, this trend line is something which is where SPX is traded inside of that. And one of the things you notice here, and then we'll get to, I'll zoom in and I'll show you a lot of these levels that I marked up. And I know the chart looks a little bit cluttered, but it helps me look at these levels without plotting all the moving averages, etc., right? Now, this is a level that I've marked here, which is called the major breakout level, and we'll take a look at this in a little bit of detail here. So this is a point where almost like, these are like 18 months where the market kind of consolidated and couldn't take out this level, call it roughly 2100, right? And when it took it out, when it took out this level, then the market had a substantial move, right? As you can see, uh, from about 2100 to where we finally reached, which is close to 3300, 3400, very close to that one. The highest was 3386, right? And my expectation was we'll come back into the channel. I had absolutely no idea that this is going to fall so much. I don't believe anybody did, right? So here's the kind of levels that I typically mark to sort of keep myself informed of what I'm watching, right? So clearly one of the things that I was watching was this level, right? So when we did take this out, it was definitely it made sense to short. And now that we are back close to this channel, I'm playing it more sort of by the ear, right? So I'm deciding whether to go long or short, but I'm definitely not short overnight anything, and neither am I long overnight anything. I'm just playing day trades. I'm taking day trades because the volatility is still so high that it still lets me trade enough during the daytime, right? So this is what the level was on December 2018. So that was an important level. So when we took that out, the market went down, and of course it stopped here. So marked that level as the most recent low. So this is a reference point for you, right? I know there's a significant difference between where we are and what this low point is. But if the market doesn't take out this trend line, right, if it goes back above the trend line, I call this roughly to 2500, then I'm a little bit more bullish. But if we start to break this level down, then my stance will be more sort of bearish. A lot of people, technicians, say that you end up retesting this low. Again, time will tell whether that happens or not. So again, I had marked this one. I showed you the major breakout levels, so I marked that. Now these are levels that the 150 moving average, the exponential moving average, which also coincides with the 50% between the most recent high and the low of 09. So that's an important level right here. Now this is the 200 monthly exponential moving average, and this stands at about 1845, right? And this is the 61.8% retracement, right, from the 09 low. This is the 2000 low, right? So these are again different levels. I'm not suggesting by any stretch of imagination that we're heading here, but if these levels start to get taken out, right, then what are the additional levels you can focus on. That's one thing that's important to look at. So I'm going to switch momentarily to the daily chart, and I'll show you a couple interesting things. So this is currently using the ultimate trading strategy, right? So I've marked this. So one of the things you'll notice is that if you were actually trading this system, so you had some good trades here, another good trade here, and it last trade closed at 33.66, which is really close to the top. And then a couple days later, it actually entered a short position, and that short position is currently open, as you can see from here, which is up 664 points, right? So in about literally, excuse me, from 225 to right now, you've gained 664 points using the ultimate trading strategy. I'm going to switch you and show you something else as well. So this is a site which is Collective 2, where I track all the trades using the ultimate trading strategy, and so been tracking the trades since October. And as of last year, we had returned, just trading this strategy, we returned 19.5%. And in this year, which is 2020, which has one of the worst stock market decline in the history practically, which is the month of March, the system has actually generated a profit of 22%. So instead of being down 30-40%, you would actually be up 23.8%. Now in the entire year, so the system gained about 18% in Jan. It had a small loss of 2.7% in Feb, and 22% gain this month, for a gain of 41% in total. So this particular site, it has a total of 15,000 strategies. Yeah, it's a 15,000 strategies, and And the Ultimate Trading Strategy is currently ranked 7th, right? So it's in the top 1.1%, which also you can see that this system took 139 trades, out of which 98 were profitable, right? So the total cumulative return is 65.5%. And you had the win month of 83.3, just one losing month, which is also very insignificant in the big scheme of things. So I'm now going to switch to my Discord room, and here's where I started to look at what would happen when the market is going to bottom, right, or when it comes close to a bottom. What are some of the factors that we're going to look into? So this is the SPX chart, and the first thing I mentioned is the percentage change, like the daily percentage change for the market to bottom. I said 3 to 4 factors come into play. The first thing is that the market advances by over 5 to 6%, which was true yesterday. The advance outpaced the declines by 9 to 1, right? So this is just the total number of issues or stocks that are advancing versus the total that are declining. So if you have a total of 10 stocks, 9 are going up and 1 is going down. So that's the kind of day you want to see happen in the market, which happened yesterday, right? So in this case, we can see 91% issues were advancing and about 8 were declining, right? And then another thing that you look at is how much volume is flowing in the issues that are advancing versus how much volume that's flowing in issues that are declining. And that's a useful parameter. And that also needs to be above 90, which was yesterday the case. We had 94.3% volume flowing in issues that were advancing, and then only 5.7% issues volume flow in issues that were declining, which was a really good sign. However, this ratio that I talked about in the last video, which is the VIX ratio of VIX to VIX 3M, is still above 1. So this is not bullish at this point in time. So what I would like to see is that this ratio to drop below 1. So we had one good follow-through day, and in fact even today, for most part of the middle part of trading, we were actually in pretty good shape overall, right? This ratio was maybe not like 9%, but was definitely close to 3-4%. Now, what I'm looking for is like a couple more, follow-through days, and the VIX ratio basically dropping below 1.1. So it's we'll switch back and take a look at that study and see what kind of data we had at the end of the day today. So I'll switch to the SPX chart here and go to the daily version of it, and you can see we only went up about 1.5% today, which obviously doesn't meet the criteria. We had a good advance decline ratio. 80% of the issues were advancing and 20 were declining. And also the volume wasn't too bad, right? 80% of the volume was flowing in issues that were advancing, and 20 in issues that were declining. So that was definitely a good sign. However, this VIX ratio still worries me, right? I just want this volatility to start to drop before we'll see any sort of meaningful bottom to happen, right? In addition to this, I already walked you through all of these levels, right? So keep an eye on those levels, right? There's no guarantee. My first line that I'm paying attention is that trend line, right? So I'm hoping that as long as this trend line, right? So if we trade above this trend line, which is 2,500, I'll consider that bullish, and it needs to sustain that, right? So it needs to stay above this level. So as long as it stays above the 2,500 level, I'll be less sort of inclined to short stocks, right? So right now I'm not short on anything. Most of the trades that I took today were on the long side. I mentioned in the trading room that I traded Booking long, I traded, Facebook, Amazon, and I traded Microsoft as well. So those were every trade that I took was on the long side, right? And I squared up all my positions at the end of the day. So what we'll do is over the next couple of days, we'll continue to monitor this. I post this in my Discord room. I'm going to post this in the Discord room each day. So, at least people who our members can take a look at what's going on, and then we can together see how we're getting close to a bottom. So hopefully this helps, and I'll talk to you guys in my next video. Bye bye.